We're here to talk about prediction markets. I think over the last few years, we've kind of seen prediction markets grow from a niche product to more of the most fastest growing consumer product and also maybe institutional leaning as well. I think a few topics we want to cover today is how large and durable is this opportunity, the regulatory scene, how does it get solved, and then what are some current and future use cases, and then maybe what's missing from preventing these use cases from occurring. But first, I'd like to have my fellow panelists kind of just give brief introductions on themselves, and then maybe their backgrounds and connections to prediction markets. And then Tim, we could start with you.
Hi, Tim Mcdermott. I am currently on the board at Kalshi, which is a large prediction market here in the United States. Previously, I was general counsel and then CEO of a prediction market called Nadex. And I have some other experience I was at the CME for a while. Early in my career, I was a financial markets litigator. And I will say that any comments I have today are my own and are not representative of the views of Kalshi or any of the executives or employees at Kalshi.
Awesome. Yeah, my name is Zayd Alzein. I'm with Kairos. I'm the CTO. And we're a prediction market aggregator. We're built on all the major prediction markets, Polymarket, Kalshi, and providing tools for institutions and for retail traders to trade on prediction markets like a pro.
I'm Joe Green. I'm a VP in Global Derivatives at CBOE Global Markets. Reformed lawyer and big prediction market fan. And I guess my comments are also my own and not the comments of CBOE or any of the executives there.
Yeah, I think to kick it off, the first question would be, I guess, how large is the prediction market opportunity today? And then maybe what's different about prediction markets within the last 5 years versus maybe a couple of decades ago? Because, I mean, I'm sure as we all know, this is not a new financial product. It's been around for a while. I think, Tim, you have been in the industry for a while and very familiar with the early stages of it, so would love to hear your insights.
Sure. These markets have been around for a long time. Actually, they've been around. Prediction markets have existed in one form or another for couple thousand years. But as recently, I mean, as far back as 1988, the Iowa electronic market was allowed by the CFTC through a no-action letter to provide election markets for research purposes. In 2000, the Commodity Futures Modernization Act allowed for sort of the formal regulation and recognition of prediction markets in the United States. And Nadex, which was an exchange that I was affiliated with, shortly after that started offering binary options, which are essentially predictions. Contracts that pay off at either 0 or 100, depending on the result, on a range of financial markets and commodity markets. And eventually, we started to try to get into election markets. Originally, the CFTC objected to those markets, but Kalshi in 2023, I think, started to try to list election markets, went through a series of court cases, prevailed, and got to the point where election markets were acceptable on U.S. markets. Shortly thereafter, contracts that were based on sporting events started to trade. And from about the end of, about November of 2025, you saw the market just increase at a vertical rate. And so I think Kalshi is now doing over $1 billion worth of trades a day. They are the biggest player in the space right now. They're probably about 75+% of the market. Polymarket is about a third that size, and a newer entrant, Rethera, which is a entity backed by Susquehanna and Robinhood, is starting to do some activity in the space. And then there are a lot of new players that are trying to get into this space. There are currently, I think, over 20 exchanges seeking approval from the CFTC. Currently, they recently approved, I had to write it down because it's hard to keep track. Optex, which is affiliated with, as far as I understand it, with DRW. Water Street, which I believe is affiliated in some respect with Cantor and BCG. The Ludlow Exchange, which is going to be known in the market as Novig, and there's another exchange, ProfitX. And I actually think the DRW exchange, I'm not sure that they're going to actually do prediction markets, but virtually all the other ones that are pending are in the prediction market space. So it's a large, large market. It's got a lot of potential that hasn't been met yet, so I think it's only going to get bigger.
Yeah, I think that speaking to the potential and to the opportunity and the size, I mean, I will go so far as to say that CBOE is really not interested in getting into sports, right? So that's not where we see the opportunity and the size. The opportunity in prediction markets really, I think, personally, stems from two primary differences between prediction contracts or event contracts and sort of existing derivative products. The first is the hypergranularity that you can get to using prediction markets. I can settle a contract to anything that I have a really good and reliable and credible data source on. So, you know, if I've got a credible, reliable source on a corporate KPI, which we do, I can sell a contract to that. If I have a credible, reliable source to the value of a Pikachu card, I can settle a contract to that. I can settle a contract to almost anything. And I can get very granular. So I don't have to go long Disney. I can go long park attendance. I can go long concessions. I can go long, you know, the number of Mickey shirts, as long as I can get the data to sort of back it up. So you can segment sort of larger risk into its component pieces, kind of like Lego, and then reassemble them the way that you want them to be. And I think that's very powerful. I also think it's very powerful that these are settled in what I would consider a realized format versus an implied format, right? So you have, I mean, I don't know how many people in this room like to trade, but if you've ever traded earnings and gotten beat because, you know, they beat earnings, but the stock crashed because the analysts said that next quarter is not going to be as good or whatever it is, there's nothing worse than being right and getting beat. So, you know, the fact that these settle to an actual number, not to some, you know, prediction about what is going to happen in the future, I think is also incredibly powerful. So I think with those two fundamental differences in place, the opportunity for both the retail market and I think the opportunity for the institutional market and for taking these contracts and moving them into exchange traded products and other formats is tremendous. You know, for example, you know, if you were wanting to put together a fund that had to do with cancer, right? Cancer research, cure cancer 2030, whatever. And it's going to include pharmaceuticals. It's also going to include FDA approvals. It's also going to include government resources spent to support cancer research, maybe in the form of grants. But those things are all measurable, and those things all have reliable sources. And so you can start baking these things into larger wrappers that are more fundamental to the economic system. Does that make sense?
Yeah, I think it makes sense. And to kind of touch on the point that you talked about when you mentioned like how prediction markets can be used to isolate risk, like inside of an investment. You know, when you're like essentially buying an equity because of like implied like earnings or something, you're taking on like unlimited like amounts of other variables that could happen. Maybe like the CEO just drops dead the next day, and all of a sudden the stock price falls. You get to kind of like, you know, like have the isolated risk.
Or the CEO's on teleprompter with the head of HR.
Yeah. So yeah, like there's so many things that could happen, which is kind of the nice thing of like of the type of product. And I think that like the reason why we're seeing sports like so heavily like integrated into like platforms like Kalshi right now relies on probably like I think at least above 50% of sports volume. Like I think that's kind of just the means because people are used to like essentially trading these outcomes, which are like, you know, props, like over under a certain amount of points from one player, which is like how you would traditionally trade a sports market. It's the same as books did it. And it really does go down to like the deepest layer of just like peeling away all the external factors that could affect what you're essentially just trying to bet on. So I think it's the most natural like intro to it, and eventually it'll hopefully segue into more like realistic products for like institutions to use like on a regular basis.
Well, I'm sure that I think it starts with sports. The oldest adage in investing is invest in what you know. Now, I'm not a mind reader, but I'm guessing that if we go and we take a poll of 100 20 to 30-year-olds on the street of Chicago, are they going to know more about the markets and the derivatives markets, or are they going to know more about sports? Now, I'm not saying that sports are what we should be doing necessarily, but to think that it's not logical that that's where people are at. I mean, sports have a tremendous amount of data available, probably for free, more than the markets maybe even, and people understand it. People instinctively understand the volatility of a football game versus the volatility of the S&P 500. I think it's an interesting thing, but if it bridges the gap between seeking data, making an investment, and then sort of realizing whether your investment works or doesn't work, then it will do great things for the overall markets going forward.
I think this sounds like a good transition for
Yeah.
regulation.
I think we established that the demand is there, and I guess the next question would be, can the regulatory frameworks kind of keep up with this demand and account for this demand? I think Tim and Joe have unique perspectives on regulation. Would love to hear your opinion, and especially for this audience of investors, prediction market builders, and maybe just people interested in markets in general, kind of what they should look out for and kind of what to expect from the market. Tim, we can start with you.
So almost 100 years ago, there were efforts by states to shut down futures trading on exchanges because it was deemed to be illicit and immoral gambling. And those markets started with people creating forward contracts for sale of commodities at a date in the future, and then they started trading the forward contracts as futures, and they created an exchange, and people tried to shut those down because they considered that to be gambling on the product of the farmers, and it was going to destroy the farming community. The Commodity Exchange Act was passed with specific provisions saying if a contract is traded on a federally regulated exchange, then that contract is not subject to state gambling laws or and the federal regulatory regime preempts state gambling laws. And the language in the statute is pretty clear, but many states, particularly states that have heavily invested in gambling as an industry, have tried to shut down the prediction markets. And so you see a lot of state actions either brought by the states to claim that, in state court, claiming that Kalshi and others were violating state laws, or actions brought by Kalshi to effectively enjoin states from bringing those kind of actions against them. I think there are 18 different state actions that are pending. They have actions in state court and federal court. One federal court in the Third Circuit Court of Appeals has decided in favor of Kalshi that federal law does preempt state laws. We've got state court decisions that go the other way. We have an instance where a state or a district court judge ordered Kalshi to liquidate existing positions of trades executed in Michigan. The CFTC then ordered Kalshi not to do that because those were finalized trades, and for the integrity of the market, they had to stay in place. So it's just a mess to some degree right now. But I think ultimately it's either going to get cleared up with additional regulation or additional legislation from Congress, more likely, I think, will end up in the Supreme Court, and the Supreme Court will decide whether or not, when Congress said that the CFTC had exclusive jurisdiction, quote, over these products, they meant that the CFTC had exclusive jurisdiction.
Yeah, I'm not going to try to thread the needle between quote unquote gambling and trading or investing. I think that is a philosophical discussion that I am happy to engage in with anybody in this room over beer. What I would say is I agree. I think we're heading for the Supreme Court. Some of the actions, as we discussed, are going to sort of prompt that action sooner rather than later. The states have a lot of money at play here, right? Because this is tax money. This is I want my pound of flesh, and even if you end up at the Supreme Court, nothing prevents obviously the Congress from going and changing the legislation, which depending on how the Supreme Court ends up, we may or may not see, but I'm not going to even try to thread that one. What I am going to talk about, though, is that we have, and I'm sure this is not new to everyone in this room, but the financial markets in this country have split regulators, right? You've got the CFTC and the SEC, and their jurisdictions are different. I think that right now what we're seeing is a more collaborative CFTC and SEC relationship than we've seen perhaps in the past. That said, I think that products that are securities need to be listed on securities exchanges. That I don't think is a leap, and I don't think that that's sort of up for discussion personally. Now, where that gets interesting is things like corporate KPIs. In my opinion, I think in several others' opinions, should be securities and listed on securities exchanges, which are regulated by the SEC and not the CFTC. So the real question is how are the regulators going to play together to ensure that the existing rules on the book that everybody plays by are actually enforced? CBOE is sort of following that direction. We've listed XSP binaries, so those are binaries on the mini S&P 500 options. We listed them on our securities exchange, or a securities exchange that we run. We're bringing to market corporate KPIs. Those will also be listed on a securities exchange, which will be regulated by the SEC. So we think we're taking a responsible approach to the existing regulatory frameworks, and we're hoping that the regulators sort of, do the best job that they can in enforcing their rules appropriately.
I think regardless of court decisions, there's obviously a broader market opportunity here. And I think it's obviously larger than the current product offering and regulatory landscape deem. So I think, Zayd, what are some kind of future use cases we want to see come, and then what has to be true to have these use cases become possible?
Like the use cases for like prediction markets
in general.
Yeah, I mean, like the thing is that Kalshi in Arabic literally means everything. So there kind of is just unlimited like types of use cases that you can apply like prediction markets to. Whether you're just like a business, like I saw in New York, some bars like hedging against some outcome of like the Knicks game or something, and then use that to buy free drinks for everyone.
Go Knicks.
But yeah, like if you're just a small business, you can use it to hedge, or if you're like a retail investor, some people like to like put their money where their conviction is, whether it's in sports or whether it's in like culture markets, or even if you're just like a person who like likes to kind of gamble, you can gamble by trading, by just kind of throwing money in there. Types of like residential markets. I even saw Pokemon markets where you can bet on like different types of like prices on like a Charizard card, or even I know Kalshi had some interesting ones where they listed some StockX ones like Labubu prices. So there's a lot of like hot exotic markets that come out just like for advertising sake, but then there's also like a lot of like CFTC regulated, especially contracts on things like earnings, on things like actual like societally like non-degrading things, which is why I kind of do like the the fact that there are like multiple venues with different purposes, like ProfitX or Novig, which is specifically for sports, because it gives context to the markets that you're trading and like what the purpose of you being there is, as opposed to being dropped into one spot where you can essentially do anything you want.
Yeah, well, I mean, think about the use case. They're practically unlimited. Does anybody in this room live in Florida? Is it hard to get insurance in Florida for hurricanes? Yes. Okay, so let's say you want $200,000 of coverage in hurricane insurance, okay? So you buy your insurance, a hurricane hits, you've been paying your premium for years and years and years and years and years. A hurricane hits, and your house is spared, miraculous. What's the payout? 0, right? Okay, so I'll take the premium, I'll put it into an event contract that basically says, if a hurricane hits my zip code, right, I get paid out. So you have control over the coverage, you have control over the premium and the amount that you want to put into it. So now a hurricane hits, your house is spared, you still get paid out. I'm not saying that those situations will necessarily always make sense or that the economics will work out, but the use cases for prediction markets go way beyond sports, right? It goes to the insurance business, which is very akin to the options business, right? And, you know, again, the ability to get granular in your risk is a key characteristic of these contracts, right?
Yeah, and it's not just theoretical. Those weather contracts exist today. Those are current examples of ways these contracts are being used. And in fact, some of these state actions those are included in the kind of contracts that they say or claim are gambling. So there really is no defining difference between this range of contracts. But there's, as was mentioned, Kalshi translated means everything, and there are ways to trade and hedge risk, discover prices, develop information regarding everything with prediction markets. They're a really cool tool. Here's one example of sort of the potential. Kalshi recently launched a midterm election hub showing information regarding all the elections in the House and the Senate, et cetera, across the country. Well, that hub gets a ton of hits, but only about a quarter of the people who trade on that on Kalshi, trade those contracts, comprise people looking at that information. 3/4 of the people don't trade; they want the information, and that's really, I think, reflective of both the value of these markets, that they provide information to people who are looking for it, and the potential of the markets. That's 3/4 of those people who could be potential traders down the road as that appreciation for that information grows larger and larger.
Yeah, it looks like we're coming up on time, so I want to thank the three of you for coming up here on stage with me, and I think we're going to move on to the next panel, if that's correct. Yep. Oh, if we have time for questions, we'll love a question.
I have one quick question. You said something that's crucial. The information. Where is all this information being aggregated or put together that you guys are talking about? Where is that coming from?
I guess like when you look at a binary option, the price that it's trading at is like the implied probability of it. Is what I think most people would say. If you looked at like the New York City mayoral election, I think that was trading at like 70. Yeah.
Are you asking where you can get access to it, or are you asking?
No, I understand. I'm getting access. Where's all that information coming from?
Okay, so yeah, that's exactly what you were sort of explaining, right? So, in traditional options, are you familiar with options at all?
Yeah.
Right. So the delta is the probability. With event contracts, you sort of skip over that, and literally you're trading at the probability. So as people trade, right, as they buy up the yes, the probability is going to go up, and as they sell the no, or buy the no, it's going to go down, right? So essentially, it's the public sort of weighing in on the event occurring that's actually providing the probability.
So it's essentially the wisdom of the crowds coming together to agree on the probability of the event, the thing that you're pricing happening at expiration.
I think we have time for one more question, maybe up here.
Oh,
Sorry, he's the mic back there.
Zelensky's suit, Saylor selling Bitcoin before May 31st. How are participants expected to trust those markets exhibiting widespread resolution problems?
I couldn't hear the question.
I think he was going to comment on like resolution risk across venues especially. And I think that's a problem that we're trying to solve at Kairos. It's very hard to. Every exchange resolves differently, and it's hard to prove some things. But I'm going to defer to Joe.
Well, no. So one of the issues that I think the market has had and is coming to grips with is writing good rules and having good settlement sources, right? So I think I've said it multiple times during this conversation that I can create a contract on anything so long as I have a credible, reliable source of information, right? The second part of that is defining how you're going to use that information in a very clear, very concrete way so that there's no ambiguity and you deal with the edge cases. Now, the Zelensky suit thing had to do with sort of consensus mechanisms being broken. Everyone up here, I think, is not in a Web3 environment at this point, and so we don't necessarily have that problem. That said, I think that you still do have to be very clear in how you're going to resolve contracts. So for example, if you're talking about the presidential election, who's going to win, when you look at the rules, is it who the House certifies? Is it who was announced that night? Is it who was sworn in on election day? Like, what is the actual piece of data that is going to be used to resolve the contract, and when is it going to resolve? And I think that some of that comes with experience, which is, I think, partially the reason that the contracts that CBOE is listing are gaining traction with traditional brokerage platforms and the usual suspect of market makers.
Thank you. I think we're out of time now.